Gold has come off its highs earlier in the week, and silver hits a 6-year low this Wednesday. We have Todd Bubba Horwitz joining us from the CME today. Todd, good to see you again.
Danielle, it's great to be with you.
Well, let's pull up that gold chart. You know I'm going to ask you about it. We saw a short covering rally earlier in the week, but the metal is back down this Wednesday. Do you see potential for the metal to move higher? You know, I still have some analysts saying conditions look favorable here, and gold could still possibly hit 1,300. What are your thoughts?
Well, I'll tell you, we have to look at it from a couple of different perspectives. The first thing, when you look at gold, let's look at the chart. It's clear that we had a support level at about 1080. It's clear that our first resistance on the way up was 1140, and believe it or not, our next resistance was 1170, which is exactly where we stopped. We pulled down, could not hold 1140. It looks to me like we'll probably go back to 1100, but overall, I do like the space. But what's happening here, Daniela, is that there's a whole bunch of global gobbledygook going on between the central banks, all these things are going on. So we don't have a clear path here. The way the currencies are moving back and forth, they're having a very dramatic effect right now on gold, and gold has been trading at a little slower pace than normal. It's been really under lighter volume and not really going very far. The chance of it going to 1,300, well, I think it's got an outstanding chance to go to 1,200 first. I think eventually gold will make its way back up, and I believe if you want to get into gold here, I think the best play is to buy some of the hard asset and put it in your house or put it in your safe, because I think I want to own gold here. I don't think it's something that's going to jump up tomorrow. I think it's going to continue to try to churn in this range, but I do believe it put in a nice bottom at 1080. I think you want to watch 1100 and then watch the action between 1140 and 1170 and then up to 1200, and then we'll see where it goes from there. But I think overall, long term, it looks like a good long play.
You know, it's interesting because gold was rebounding before what took place on Monday, so it was almost acting like a forecaster, Todd. But let's talk about China, which has really been driving markets. Investor confidence continues to be weak despite continued government easing. How do you see this situation unfolding?
Well, China's got a world of problems, and it should be obvious to everybody that because their banks have to keep intervening, that they have bigger problems that they're even letting on. I mean, you go back to what they have is what we call the hidden cities. I mean, they've never devalued those. They had them on their books at full value. They manipulated copper for years around that $3 level. Now copper is significantly lower. Their asset base is in real trouble there, and China itself is in real trouble, and they are scrambling to try to find the answer. And the answer is not by continuing to devalue and try this Keynesian view of economics by putting the problems off till later. The answer is to take it now and forget about it, but they won't do that. They're going to continue on the path of everybody else and try to devalue their currency and bring themselves out of it. But we know that that does not work. It has never worked. It's a lousy view of economics, and they've got major troubles here, and they're going to have to continue to liquidate. And I see China's markets melting down even further than they are right now.
Well, that said, would that help increase gold's safe haven bid?
You know, gold is right now, I think China actually is probably the biggest seller of gold right now, but I also think that silently they're buying it in through the back. So I think they're selling it on the open market, but they're actually accumulating in the back door. But that is one of the reasons that we are seeing some pressure on gold, because I think they're being forced to openly liquidate on the market some of their position, pushing down the prices because they are one of the biggest holders.
All right, let's pull up a silver chart now. The metal hitting a 6-year low, just getting crushed here this Wednesday. How do you see it set up here?
Well, I've liked silver. I still like silver. I think one of the big problems you're seeing now the difference between silver and gold, they're both considered in the precious metal category, but silver is also an industrial metal. And if as we've been saying for a year, that industrial is slowing down. So if we're slowing down, that only means that there's more pressure on silver right now because there's no need for silver right now. So what's happening is we're seeing extra pressure. Now, I believe that we've seen way too much pressure. I like silver here better than I like gold, only because A, it's easier to get into, it's cheaper. But I think that it's got a much bigger upside. When it does turn around, I think it can actually double and triple. I mean, not tomorrow, but I think that you want to start accumulating some silver at these levels here, because I believe that eventually we're going to see production. Eventually these markets are going to weigh through these troubles that they've caused. And silver at 13 bucks, yeah, we know it's been as low as 5. We know all the stories. But at this level, I wouldn't put my whole stake to work here, but I'd certainly be buying a little bit here and starting to accumulate some of it, because I think that it's a value play down here, and I do not see the commodity space staying in the tank for much longer.
All right, let's wrap here by talking about Jackson Hole. The markets are gearing up for the big meeting taking place here leading up into the weekend. Dudley this morning saying a rate hike for September is less compelling. Do you think the Fed will get it right in Jackson Hole?
No, I don't think the Fed has ever gotten it right. I don't think they're going to get it right now. And I think this is just another manipulative category in where they felt the markets were in trouble, so they felt they had to come out and make another statement. Doesn't that tell you that the Fed has no clue of where they sit right now and that they are totally debauching the entire economy because they don't know? Janet Yellen doesn't have the guts to step up and say, you know what, let the stock markets fall. We need to raise rates because we need to provide liquidity for the average guy. Now, I've said all along, rates are not going up until next year for sure. And the way they're going now, don't be surprised if they come out with some kind of QE4 program now, because really what they've done is they've totally butchered the entire economy, and we're seeing it play out throughout the globe because everybody's racing their currencies at the bottom, and we're seeing obviously a global meltdown throughout everybody.
All right, Bubba, thanks for speaking your mind. We appreciate it.
My pleasure. Always great to be here, Daniela.
All right, and thank you for watching this edition of Kitco's Gold Report. We'll see you tomorrow.